For 120 years, one name dominated American motorcycling. Harley-Davidson was not just a brand, it was the brand, the culture, the sound of freedom on two wheels. In 2006, they sold 344,000 motorcycles worldwide. They had dealerships in every state, riders tattooing their logo on their arms, and a waiting list for their most popular models. But then sales started falling, slowly at first, then faster. By 2024, unit sales had dropped 45% from that peak. And in 2025, something happened that would have been unthinkable a decade ago. Kawasaki, a Japanese manufacturer, overtook both Honda and Harley-Davidson to become the #1 motorcycle brand in America. Harley did not slip to second. They fell to third, with sales down nearly 16% in a single year. Meanwhile, Harley dealerships are vanishing. San Francisco, New York, Florida, Colorado. Some had been family-owned for over a century. A premium dealer group carrying BMW, Triumph, and Ducati just filed for bankruptcy on New Year's Eve, and used motorcycle prices are dropping faster than they have in years. So what the hell is happening? And more importantly, if you are looking to buy, sell, or trade a motorcycle in 2026, what should you actually do about it? Because the decisions you make this year could save you thousands of dollars, or cost you just as much if you get the timing wrong. To understand what's happening right now, you need to understand how Harley got here, because this did not happen overnight. It was a decade in the making. Harley's problems started with success. During COVID, their dealerships were absolutely printing money. Stimulus checks were flowing, interest rates were basically zero, and suddenly people who had dreamed about owning a Harley their whole lives could actually afford one. Demand exploded. Supply could not keep up. Dealers were selling bikes before they even hit the showroom floor. So Harley Corporate did what seemed logical at the time. They told dealers to expand, to upgrade, to build bigger, fancier showrooms worthy of the brand. According to RevZilla, some dealerships were handed 187 pages of mandatory renovation requirements. George Gatto, a second-generation Harley dealer and chairman of the National Powersport Dealers Association's Harley-Davidson Dealer Council, was told he would need to spend almost $7 million just to remodel his buildings. He negotiated it down to about $400,000. But not everyone could. Dealers took on debt. They built the facilities Harley demanded. They hired more staff. They expanded their inventory. And then the COVID boom ended. But here's where it gets ugly. Inflation crushed consumers starting in 2022 and continuing in 2023. Interest rates spiked. A bike that used to cost $24,000 with cheap financing now came with monthly payments that working-class buyers could not stomach. Customers stopped showing up. The motorcycles kept shipping. Harley continued producing. Dealers kept receiving inventory they could not move. Their floor plan financing costs, the interest they pay on unsold inventory, started eating them alive. And then, to make things even worse, Harley expanded their e-commerce platform. All that branded gear, the jackets, the boots, the accessories that dealers used to sell and make margin on. Harley started selling it directly to consumers online, cutting dealers out entirely. Gatto told RevZilla, "They overproduced, so what do? Margins on the new bikes are the worst we have ever seen. I hate to admit this, but there are too many dealers for the number of new vehicles that are being sold today. They are not making any money." Closures came fast after that. San Francisco Harley-Davidson, originally founded by AMA Hall of Famer Dudley Perkins, closed after 110 years in business. New York Harley-Davidson shut down, liquidating remaining inventory at up to 75% off, just to clear the floor. According to Jalopnik and multiple industry reports, dealerships closed across Illinois, Ohio, Wisconsin, Minnesota, Colorado, Wyoming, Texas, Missouri, and Florida. Many did not even announce why, they just locked the doors. By late 2025, Harley had around 630 to 650 authorized U.S. dealerships remaining, according to industry tracking. That is down significantly from their peak, and the network is still shrinking. But wait, it gets worse. Tariffs hit in 2025. In May, Harley suspended their annual financial forecasts entirely, citing Reuters' reporting of uncertainty around U.S. trade policy. According to their second quarter 2025 earnings call, they took $17 million in direct tariff costs in the first half of the year and projected the full year hit at $50 to $85 million. That money has to come from somewhere. Either higher prices that customers already cannot afford, or thinner margins that dealers cannot survive on. Harley's third quarter 2025 results showed a $27 million tariff impact for that quarter alone. Global retail sales were down 6%. North American sales were down 5%. According to Morningstar analyst Jamie Katz, there is little evidence that a recovery for motorcycle demand is in the cards anytime soon. So if Harley's bleeding out, who's picking up the pieces? The answer might surprise you: Kawasaki. According to Motorcycles Data's year-to-date figures through September 2025, Kawasaki's U.S. sales were up 14.2% year over year. That's not just surviving in a down market. That's dominating while everyone else is struggling. Honda, which held the #1 spot in 2024, slipped to second with an 8% decline. Harley fell to third, down 15.9%. Behind them, Yamaha held relatively steady, down 0.4%. KTM collapsed 23.8%, and Indian actually grew 4.9%. But here is the important part. The overall U.S. motorcycle market was down 6.5% through September. This is not a boom time. Sales in the first half of 2025 were the worst in a decade. So how did Kawasaki grow 14% while everyone else was shrinking? They read the room. The Ninja 500 starts at $5,399. The Z650 naked bike starts at $7,249. These are not stripped-down beginner bikes with garbage components. They are legitimate, well-equipped machines with ABS, modern fuel injection, and enough performance to keep experienced riders entertained. Compare that to Harley's lineup. Until recently, their cheapest bike available in the US was the Nightster, starting at over $13,000 for a motorcycle that weighs nearly 500 pounds. For a new rider, that is not entry-level anything. That is a serious financial and physical commitment. According to New Atlas reporting on the market shift, Kawasaki's Ninja and Vulcan ranges proved pivotal. Both the Vulcan S and the small-bore Ninja sport bikes have become popular choices for a huge chunk of the market that just wants an affordable, reliable, practical motorcycle. And here's the trend that explains everything. Small displacement motorcycles, bikes priced under $6,000, are the only segment showing consistent growth. Outgoing Harley CEO Jochen Zeitz said this during a 2025 earnings call, as reported by Motorcycle.com. He said it is the only area that really shows growth right now, and that this reflects affordability issues. The market is not dying. Riders are not disappearing. They are just not buying touring bikes priced at $25,000 anymore. They are buying machines priced from $5,000 to $7,000 that fit their actual budgets and their actual lives. This is exactly why Triumph has been crushing it with their Speed 400 and Scrambler 400X, both priced under $6,000. Royal Enfield carved out a niche with characterful, accessible bikes. Even BMW is pushing harder into the small displacement adventure segment. The brands that understood the shift early are winning. The brands that kept chasing the high-margin premium market are drowning. Speaking of drowning, let us talk about what happened on New Year's Eve 2025. A company called Motos America filed for Chapter 11 bankruptcy protection in Utah. You might not recognize the corporate name, but you would recognize their dealerships. According to Powersports Business and Bankruptcy Court filings, they operate 13 premium motorcycle dealerships across California, Florida, Oregon, and other states, carrying BMW Motorrad, Triumph, Ducati, Royal Enfield, and Vespa. These are not Harley dealers, these are European brands, and that is exactly why they are in trouble. In their bankruptcy petition, Motos America listed estimated assets between $500,000 and $1 million. Their liabilities were between $10 million and $50 million. That is not a temporary cash flow hiccup, that is a structural implosion. So what happened? Rising interest rates killed them. Here is how it works. Dealerships don't actually own the bikes on their showroom floor outright. They use something called floor plan financing, basically borrowing money to stock inventory and paying it back as bikes sell. When interest rates were near zero, carrying a $25,000 BMW for a few months cost relatively little. When rates spiked to 5 or 6%, those carrying costs exploded. Premium bikes move slower than mid-range machines. A $6,000 Kawasaki Ninja might sell in weeks. A $22,000 Ducati might sit for months, racking up financing charges the entire time. According to the street's coverage of the bankruptcy, Motos America also lost $3 million to an alleged fraud scheme that halted a planned credit facility, failed to secure a $12 million financing round, and had their SEC securities registration revoked in late 2024 for failing to file required reports. But here's the thing. Motos America isn't unique. They're just the most visible example of a problem hitting premium dealers across the country. According to data from National Powersports Auctions reported by Revzilla, wholesale prices for used motorcycles are falling across nearly every category. In July 2025, sport bike prices were down 11% year over year. Metric cruisers were down 6%. Dual sports were down 4%. Only domestic cruisers showed any strength, up a measly 1%. The NPA report said, "It looks as if the air has finally been let out of the balloon." Dealer inventory is high, consumer demand is soft, and prices are adjusting downward. For sellers, that's painful. But for buyers, this might be the best negotiating environment in years. Before I tell you exactly what to do, let us zoom out and look at where this is all heading. According to Fortune Business Insights data cited in multiple industry reports, the global motorcycle market was valued at about $72 billion in 2024. It is projected to reach $119 billion by 2032, growing at a compound annual rate of 6.7%. The US market specifically is expected to reach $8.76 billion by 2032. So the industry is not dying, it is transforming. And several trends are driving that transformation. First, urbanization is pushing demand toward lighter, more maneuverable bikes. Traffic in major cities makes a nimble Ninja 400 more practical than an 800-pound touring cruiser. You can lane split on a Ninja 400. Good luck doing that on a road glide. Second, younger riders have completely different priorities than the boomer generation that built Harley's empire. They grew up with Japanese reliability. They are less attached to brand heritage and more focused on value, technology, and features. Anti-lock brakes and traction control are not premium add-ons to them. They are baseline expectations. Third, and this is the big one, affordability has become the deciding factor for the majority of buyers. With housing costs through the roof, student debt lingering, and general inflation eating into every paycheck, a $6,000 motorcycle fits the budget. A $25,000 motorcycle does not. That is not a temporary economic blip. That is a generational shift in spending patterns. Manufacturers are responding. Harley finally got the message. In July 2025, according to Motorcycle.com coverage of their earnings call, CEO Jochen Zeitz confirmed that Harley will introduce a new entry-level model called the Sprint for 2026, with a price target below $6,000. It has been in development since 2021, and Zeitz said they believe it will be profitable, not a loss leader like previous attempts. They are also planning a second entry-level cruiser, possibly called the Eagle, to give buyers a more traditional Harley look at an accessible price point. Whether Harley can actually execute this pivot is an open question. Their previous affordable bikes, the Street 500 and the Street 750, were discontinued because they could not make money on them. There is real skepticism among dealers and enthusiasts about whether another foreign-made small displacement bike will resonate with Harley's core identity. But the fact that they are trying tells you everything about where the market is heading. Even Harley-Davidson, the most heritage-obsessed motorcycle brand on earth, has accepted that they need a $6,000 bike to survive. All right, you have been patient. Here is the payoff. Based on everything happening in this market, here is exactly what you should do depending on your situation. If you are buying your first motorcycle, this is probably the best time in a decade to get into riding. Dealers are sitting on inventory they need to move. Manufacturers are fighting for market share with aggressive pricing. And the shift toward affordable bikes means there are more capable, well-equipped options under $7,000 than ever before. Look at the Kawasaki Ninja 400 or Ninja 500, the Yamaha MT-03 or R3, Honda's Rebel 300 or CBR 300R, the Royal Enfield Meteor 350 or the Triumph Speed 400. All of these are under $7,000 new. All are manageable for beginners, but capable enough that you will not outgrow them in 6 months. And all hold their value reasonably well if you decide to upgrade later. Do not fall for the myth that you need to start on a 250 and upgrade quickly. A 400cc to 500cc bike is plenty of motorcycle for the vast majority of riders forever, not just for learning. You will save money and avoid the hassle of selling and buying again within a year. For timing, shop in January or February when demand is at its lowest. According to Progressive and multiple dealer sources, that is when you will find the most motivated sellers. Memorial Day, Independence Day, and Black Friday also bring promotional pricing and better financing terms. If you are looking to upgrade, used prices are softening, which cuts both ways. Your trade-in is worth less than it was 2 years ago, but the bike you are buying also costs less. Consider skipping the dealer entirely and shopping private party on both ends of the transaction to maximize your value. Premium European bikes like BMW, Triumph, and Ducati are seeing some of the steepest price corrections. If you have always wanted a European machine but could not justify the cost, now is the time to look at the used market. Here's a key insight from MCN's recent buyer's guide. The 2026 models from most manufacturers are evolutionary updates, not major redesigns. Euro 5+ emissions compliance required some changes, but a 2023 or 2024 model gets you 90% of the experience at 60 to 70% of the cost. The technology differences are minimal. Avoid financing if you can. Interest rates are still elevated, and the monthly payment on a new premium bike can easily hit $400 to $500. If you have to finance, shop credit unions and banks directly rather than dealer financing. You will almost always get a better rate. If you are buying a Harley specifically, wait. Seriously, wait a few more months. Harley's dealer network is in turmoil, and that means negotiating power is shifting dramatically toward buyers. Dealers sitting on inventory from 2024 and 2025 that they cannot move will be willing to deal. Do not pay sticker price for anything right now. If you want a new Harley, the optimal time to buy is probably late 2026 after the Sprint launches. Either the Sprint will be genuinely good and give you an affordable entry point into the brand, or it will flop and push dealers to discount existing models even harder to move inventory. If you are looking used, watch for dealerships that are closing or consolidating. When a dealer needs to liquidate, you can find Street Glides and Road Kings at significant discounts from typical market value. Check industry news and local forums for closures in your region. And remember, Harley reduced worldwide dealer inventory from 68,000 units to 49,000 units between 2024 and mid-2025, according to their financial reports. That is a lot of bikes that went somewhere, either sold at a discount or still sitting on dealer floors waiting for a buyer. If you are looking at Japanese bikes, Japanese reliability means used is almost always the smarter play financially. A 3-year-old Kawasaki Z650 with 5,000 miles is mechanically identical to a new one and costs thousands less. The major depreciation hit has already been taken, and you still have years of reliable riding ahead. For sport bikes and standards, the used market is particularly soft right now. That 11% year-over-year drop in sport bike wholesale prices I mentioned earlier is filtering through to retail. Bikes that would have sold for $8,000 2 years ago are going for $6,500 today. If you are selling, be realistic about current values. The market has shifted. Used prices are down across almost every category. Price your bike to sell, not to sit on Craigslist for 6 months while you hold out for what you think it should be worth. If you can wait, spring 2026 will bring better prices than winter from 2025 to 2026. Seasonal demand patterns are predictable. Prices peak in March through May when everyone is excited to ride. They bottom in December through February when dealers are desperate to clear inventory and private buyers are scarce. Private party sales will get you more than a trade-in, but you will need patience and the willingness to deal with low-ballers and tire kickers. Cycle Trader, Facebook Marketplace, and dedicated forums for your brand are your best bet for reaching serious buyers. General timing principles. The motorcycle market follows a predictable seasonal cycle. Prices are lowest in January and February. They rise through spring, peak in late spring, then gradually decline through summer and fall before bottoming again in winter. If you are buying, shop winter. If you are selling, sell spring. It is that simple. And one more thing. Always run a vehicle identification number. Check before buying used. Services like those offered through Cycle Trader or independent providers can reveal accident history, title issues, and other problems that sellers conveniently forget to mention. Here's what this all means at the macro level. The motorcycle market isn't dying, but the era of American cruiser dominance is ending. Kawasaki sitting at #1 in the US isn't a weird statistical anomaly. It's a signal of a fundamental shift in what riders actually want. Value, reliability, accessibility. Bikes that fit real budgets and real lives, not aspirational marketing images from another era. The brands that understood this early, like Kawasaki, like Triumph with their 400 line, like Royal Enfield, are winning. The brands that kept chasing high-margin, premium sales while ignoring affordability are struggling. Harley gets it now. That's why the sprint is coming. But whether they can execute the pivot after decades of going the opposite direction is genuinely uncertain. For the industry overall, this is probably a healthy correction. The COVID boom created an illusion that expensive bikes would sell forever. They won't. The market is returning to fundamentals. For buyers, this is your moment. Prices are soft, dealers are motivated, competition is fierce. There are more capable, affordable motorcycles available than at any point in the last 20 years. For sellers, adjust your expectations and move quickly. The market rewards decisive action right now, not optimistic waiting. The motorcycle market in 2026 isn't what it was 5 years ago. The old kings are struggling, new players are rising, and the rules have changed. Whether that's good news or bad news depends entirely on which side of the transaction you're on. And now you know exactly where you stand. Like and subscribe so you don't miss what's coming next.